Okay, good morning, guys. We are just going to quickly check out the FTSE. We're just going to wait for Jeff. Check out the FTSE 100. You can see that we did get this dip yesterday. Now, futures are pointing to the upside. What I'd quite like, let's just bring the picture out a little bit. What I'd quite like to see, looking at this monthly chart, let's take this line away. Looking at this monthly chart. We have got a chance for this to. I mean, this isn't really a hammer because of where it sits, but it does look like a pretty positive looking bar, and it would suggest some further buying next month if it was to remain like that. Let me just check out. Let's see if I can get these pins up here. So really we've got the rest of this week to see what's going to happen. Interest rates are interesting. Chinese trade war is interesting. What I'm really anticipating is some weakness. I don't really see this bar ending like this. It certainly could, but there's no guarantees. Now we know all about these lines because we've talked about them till the cows come home. It does start to become a little bit tricky to read the FTSE from here on in. We have to remain in the Bulls pen, if you like, in the Bulls camp, rather than the camp of the Bears. You can see that test did happen there. It actually is slightly lower, and this is slightly. I mean, that one didn't quite touch either, but this is slightly, maybe a little bit concerning that we haven't yet touched that. A weekly bar that was to shut down, that was to give us some sort of negativity by the end of the week, would suggest going into October just with a little bit of a dip, but then potentially picking up. So there is the look of this could end up being a spinning top doji, which is a little bit uncertain, which I would then expect a further dip. Yesterday's bar was suggesting that we could get some weakness today. Now, futures are pointing to the upside, so let's let the market go to the upside first. I don't particularly want to be looking for downside opportunities. I'd much prefer to see whether we could trade to the upside on a better price. So I'd like to see a fade, but then see if we can pick something up, in positive territory instead. But we'll watch out for the upside because there was a rally yesterday that I could have taken advantage of, but because I was waiting for something a bit more significant, I missed the rally, and here's the rally right here. You can see this bar here would have been a great entry, and probably would have ended up tucking in behind the stop, behind the lows. So that gets us a potential of 42, but I think we're probably more likely to get 28 out of that. But we would have had a nice tight stop, maybe down to this level here, but looks like a good 3-to-1 trade that I missed yesterday, really because of the longer term time frames. The longer term time frames, when we opened this yesterday morning, we had this bar, but then we were followed by an engulfing bar, followed by a piercing pattern, followed by what looks like a bearish belt hold almost. But then we got this this bar here, and that's where things were starting to get interesting and moving to the upside. So at this current time, let's consider where price is. I've got to check out where the pivot's going to go. So there is some support here. So this is the first area of support. There's a few different patterns here. What I'd like to see is a dip down further. I'd like to see this area tested again down here, because that would probably fulfill my my speculation that we're probably going to try and carve out a lower high after that, which would give us a head and shoulders pattern, maybe into Thursday and then Friday. Now we're going to check out some news and make sure that we have. Now I wish I could talk to you guys or see the chat. but I can't. Actually, there might be a way I could do it. I can't see if you guys are talking. I can't see it, so I apologise if I am ignoring you. I'm not ignoring you. I just can't see the questions for some reason or another, if there are any. So anyway, I want a dip down and then a push to the upside. Whether we take advantage of this dip is the question, because that's potentially 30 pips. Which would be pretty nice gains. So let's see where resistance may come in initially. That area there looks like resistance. We're going to pull a fib on it as well. That looks about right, doesn't it? So that's where our fib is. So this point is... That's our resistance line. This is currently support. And this is where I'd quite like to trade. Or certainly start looking. Oh, I didn't know I could do that. No. I'd like to start looking around that area with my real target a little bit lower. Now I'm just going to check out. I'm going to move this line in a moment. This is the area that I want, that I really want to trade. I'm going to check out some of these trend lines here. That's quite a way off actually, so probably not of huge interest to us. But that starts to look a lot more attractive, doesn't it? Let me change. I need the chart to be fairly busy. So right now that's going to look a lot more attractive if we get somewhere in the area of the 31, maybe a shade lower, 16. I remember, yeah, the 16 looks about right, doesn't it? Which might even be a day or two away. Okay, we'll have a look at that as a potential. Let's cross there. Yeah, it does suggest that dip actually. It suggests to me that the 74.50 area is where I'd want to try and trade it. Now again, if we pull a fib on this, that also gives us this kind of 16, 20, 20 area, somewhere around there. So let's put it at 74.20. It's around a round number. Well, it's not a completely round number, but it's um, an easier number than 74.16. So there are probably the levels that I'll look for on the FTSE today. So I'll leave this chart with all these lines on it. Now I do probably want that one as well. Let's change that up a little bit. It looks to me like it leads us, you know, the target then becomes somewhere in this area down here. That would be a bit high. So this would be my favored point to try and take a trade. Somewhere around this 74.20, between 74.20 and maybe 7400. I know that's a little wide, but we'll start to see signs and signals probably somewhere in the 74 20 7400 level, and then we'll be able to trade this properly to the upside and get in the right direction. Jeff's having problems coming in. Right, then let's get to some news and data just to make sure that we are on top of the day. That is obviously imperative. Interestingly, the futures are pointing to upside, and we're going to check some of the other some of the currencies as well, because the market in focus today is really the dollar. I mean, we will look at the Kiwi, but it's the dollar which is the interesting one, and it's because of this. You know, this has been pretty much telegraphed from quite a way out. Yeah, that's been telegraphed from quite a way out. So we're looking at the Fed, but that's not until 7. So we'll probably get maybe some fairly normal trading until later on. And this is the thing about these levels. It's fine picking them out, but actually we've got to consider what's the driver of the day and when will the driver probably take effect. And realistically, it may not be and may not be until the FTSE 100 actually closes, the UK market actually closes. So if we don't get moves until the UK market closes, then we're going to look for upside all day. That's the bottom line. We look for upside all day. Right, then let's have a look at some of these other markets. So I want to check out things against the dollar. I want to check out the Aussie. Interesting. The Aussie looks like it could be looking for upside as well. No, Jeff has been calling on this one. Let's have a look at this Aussie. Look at this. So the monthly might start to take effect with some of these charts now, because we're not that far away. Looks like it's going to attempt to be fairly positive now. Where is monthly level? Where are the monthly levels? So it's gone through support there. There is some resistance there. And difficult to see which is the most significant level, and without doing a significant amount of work on this, I think we have to aim there. That's the weekly. Jeff, you here with us?
Hello, mate. Yeah.
How you doing?
Oh, having a wonderful time. Technology overload here.
Oh no, mate, that's not good.
Yeah, well, I've got Hangouts working, but at this stage, I still don't have any charts, which is interesting. Oh, hang on.
Okay.
Here they come.
Okay, great.
Everything's looking on the up.
I was just starting to look at the Aussie actually. I was just talking about the US rate hike that is due this afternoon and how these markets might trade. Oh gosh, the Aussie could well be on a point of resistance there, but you see, maybe it hasn't dipped enough. It might have dipped enough. I mean, it looks like. That's interesting. I'm interested to get your take. I've been through the FTSE. I've picked out my levels in the FTSE, but interesting to get your take if you've got a chance to share.
Yes, certainly. I'll do that if you throw it my way.
Sure.
Mind you, I just lost everything. So
okay.
My charts look nothing like they probably should at this point. Have you got me?
I gotcha.
Okay, so there's the Aussie. I'll stick a few levels on here which I think are interesting for today. And the first one I'm going to put on is the one where I expected most price action to take place, and that's around about the 72.50 level, which is around about here-ish. And that, of course, was before. But it looks like the Aussie just followed the Kiwi, did it, on the Kiwi news?
Was there been Kiwi news?
Early this morning there was. I don't really know what the result was, but I think Kiwi appreciated. And
do you know what, that may be speculation, because the Kiwi that we got an interest rate decision on the Kiwi later as well.
Is that overnight?
Yeah, that will be. Yeah, that will be overnight.
Okay, so it could be interesting. Could be an interesting 24 or 12 hours or so coming up.
Absolutely could, yeah.
So the levels I'm putting on my chart are pretty much where I saw the Aussie trading within today. But already we're pretty much outside of that. Well, we got outside of that, certainly. And we're now coming back into it, which is pretty cool from my point of view, because I like to see this, what I'll call a range. I don't think it's that defined, but it's there. I'll call it a range inside these highs and these lows, and we're nearly back in there. I might be willing to take this short in the not too distant future. Well, we've got 9 minutes to go before that candle. Don't like the candle at all, I've got to say, but yeah.
Which one are we looking at? Well, you're on the 30-minute chart.
Yeah, 30 minutes.
Oh,
chart.
yeah.
Probably like to see that come back to about here somewhere. We'll see. I'll make a call on that a little bit later. But in terms of where do I see it going today, FOMC, mate, I think is the four-letter word that we need to be having uppermost in our mindset as we trade today, in particular against the dollar.
Do you know what? This is what I find quite interesting. That the FTSE futures are pointing to the upside, and as are US futures, and as the pound can affect the FTSE, you know, is if the pound is strong, the FTSE tends to be a little bit weaker, and vice versa. It's the same with the dollar. You know, when the dollar's strong, it tends to affect US equities, but that doesn't seem to be filtering through, which I find quite interesting.
That does sound interesting.
So you know, do these currencies actually appreciate into that news? Which is the point I guess I'm making, is that I am looking for FTSE to come off a little bit, but maybe it's not until either the US open or maybe it's not until the UK market is completely shut down. You know, I think we're probably going to be in a bit of a holding area for the FTSE, and maybe it's going to be the same for these other currencies.
Do you know what? I don't actually stretch my my brain that far on FOMC day, and I call this FOMC day. It's the prelude to FOMC, which happens in about, I don't know, 10 hours, is it? Something like that. All I consider The only things I consider on FOMC day, if I'm looking at the majors, is where they're positioned in relation to the day's events that would happen in the normal course of events. So I'm looking at pretty much pivot lines here. This being the central or daily pivot area, this being the first resistance, and this being the first support. So my rules are that I don't trade away from those areas on days such as these. That makes it very, very simple for me. I don't have to think about it too much.
Yeah.
And I like that.
Yeah.
I like when I don't have to think. So the only areas I'm willing to trade in are these areas here, inside these three lines. And the best way to do that for me is to trade from resistance to support.
Right.
Or support to resistance.
Right.
And that's really is my simple approach on a day such as today. And if it doesn't set up like that, I'm not interested. That's pretty much
interesting.
That's pretty much it.
You've done exactly what I've done today, which is draw my lines. I've got similar charts, which if I'll quickly show you, this is what I've done with the FTSE. Same thing. Yep. I'm not interested until here, here. Not too interested in what I'd like to see is it push down here, come up and give us a head and shoulders, give us the lower high around here. So I'd like it down here really, so I can trade the upside and then get out and then see what happens and see if I can get an even better price to the upside. But we'll see. If futures are pointing to the upside, this pattern may not play out. We might just start to surge forward again. So it's very similar. The way that I've drawn my lines, and I've just given you the screen back, is the same way that that you've drawn yours.
That's very interesting, isn't it? I'll put mine on because I actually had mine on earlier, and the disruption to my normal transmission absolutely stuffed up everything, and I've got no idea what I've got on my chart. So
yeah,
this one here, for instance, hasn't moved far from yesterday.
So this is the pound.
Yeah, this is the pound.
And you got an order in here, have you?
No, that's actually not mine. I'm on the TTR account here.
I mean, look at that. That's a reversal pattern. If ever you've seen one, I mean, it looks scruffy, but it's definitely there, isn't it?
Oh, it's definitely there. Yeah, no question. I'm still bearish this, by the way, and I'll show you why in a tick. I've actually got an order that is not this order. I've got an order short in the market, and it should be on this account as well, but I don't see it. That's interesting. I better put it back on this account if it's not.
That's the more I'm looking at these charts, the more it suggests that we're going to get a little bit of dollar weakness to start the day. I mean, which again I think is interesting because I wonder whether this is flush out point, get rid of everybody, and then when the price is actually quite attractive, we'll start buying up because they're raising interest rates. There's every reason to suggest that we're going to get upside fundamentally. It doesn't always play out, but I wonder whether we actually do start the day with some weakness and then we start to push to the upside in the dollar. So we start to see things like the pound and things like the Aussie, the euro, actually weaken later on rather than from the outset.
Yeah, look, it wouldn't be the first time that happened, and I suspect definitely it won't be the last either. And I'd be more than willing to entertain that idea, I've got to say.
Quite a clear trend line down there, isn't there, from the lows of that that particular move? We got it's quite nice cyclicity, and actually looking at what could be a place that this could get picked up. There's quite a nice little trend line going on there.
Yeah, I've been looking at this line more than anything. This one.
Oh yeah.
Actually, doesn't start there. It starts down here. Maybe even there.
Yeah, I remember this one. Yeah.
Yeah, that one there.
Yeah.
And we've still failed to get through that. But we do have the confluence of what really is the first daily resistance level here, and that the back side of that trend line that may be enticing for buyers as a target as well. I don't know.
What do you think?
Whether we're going to see that today, but it's certainly within my parameters of being able to trade that if it does
Yeah,
set up.
yeah. With that lower line,
This one,
the lower trend line, yeah. Would that run into
trend
any?
line.
It looks like tomorrow that could run into the weekly pivot, couldn't it?
Are you in this one?
Yes.
Yeah, we've kind of we've missed the price in time effect here. We've gone.
But that could be interesting though. If that was to take a dip and hold by tomorrow, that would run into the weekly pivot, wouldn't it?
Weekly pivot is around about on this one 131.44, which is about there. And I'll just change the color of that so we know what it is.
So that would be tomorrow. I'll tell you
like
what, mate. Let me quickly grab the screen while we get the UK Open. Let's see what effect we have. Unless you've got anything to specifically watch.
Not to trade at the moment, no.
Not to trade. Okay, great. All right. Well, we start with a push initially. Yeah, these futures were correct. Now I need this to fail here. There's no way I can take this right now. So that's the level there. Let's put this in this color. So that's starting to change the picture somewhat.
So where are you going with that? You're looking to get back in long, are you?
Yeah, I mean, we've got to consider the longs rather than the short, but we've also got to get the right price. So it's not like last week when we were just looking to get in because price was really attractive. This is a completely different picture here. Now that would lead us somewhere in this area. This is the real area, which is why my line is bold. The area that I really want is 74.16. The area where I will start, I'm not going to trade here. 74.77 is too pricey for me. There's probably enough room, to do something, but this is looking way too pricey. If we get the dip, then I will consider going long here. And I may even consider a short if we break through the 77, if it's a decent enough setup and there's enough room. But what I really want is a long here, and I want a long here. Sorry, I should say that again. I want a long here, and if this doesn't hold, then I want a long here. And then we could be, falling a lot further down from that point, and that's the point to maybe consider a slightly different method, because I'm still not quite convinced that we haven't seen the low, but we did come a long way. When we look at this on a weekly chart, that's a long way up. But we do have this break of this intermediate level here. So with the break of the intermediate level, I still think that there's a chance that we could come down and retest some element of this particular bar from last week. So we'll just have to see whether that plays out. But really, I think that my main focus is trying to pick it up at this price and this price, with the potential that I'm going to trade it into the price as well and then flip positions. So that's the thought of the day.
And I've never taken any notice because I'm really don't have it on my charts, only since you and I started talking about this show, I suppose.
Yeah.
How does it react to things like interest rate rises in the US, as you'd expect?
Yeah, it will react as you'd expect. I mean, obviously when there's interest rate rises in this country, it does play an effect. But the FTSE 100 is so global that it does actually get pretty pretty intertwined with any of the currencies, any of the majors, I should say. Maybe less so the Swissy and less so the Kiwi. But to a degree, the CAD, because we do have oil stocks in the UK. So that would be the least of the big ones, but definitely the dollar, definitely the euro, definitely the FTSE, definitely the pound, and to a lesser degree the yen. So it does play an effect, and plus the fact a lot of the FTSE 100 companies also are American companies, or certainly have American arms to them. So they it can often follow the patterns that have emerged in the US stock prices as well. So there is certainly a correlation. There is certainly a correlation.
Well, look, nothing's exempt from a US dollar interest rate rise, to be fair,
This is it.
in any financial market. So
yeah, this is it.
It is going to move on this announcement, whether it is for or against. One would think, and again, I can't find that betting on this just as a matter of interest. Really, it's not that crucial that I do find it. But if anybody can find it anywhere, then please let me know, because I would like to know what that is actually saying.
Oh, I see what you're saying. Well, the odds on an interest rate rise.
Yeah, what the bookmakers are thinking.
Okay. Let's have a quick look. We'll do a Google search and see what we get.
You use it. I won't tell you what terms I've used, but you might come up with a result where I haven't.
Bookmakers. PIMCO? No.
Yeah, I don't know what the blooming side is. Give me the heebie-jeebies. Never mind. As I say,
Yeah.
not earth-shattering. We know it's factored in as a positive rise. Well, I won't say positive rise. I'll say a rise. Everyone's thinking it's going to happen. So I guess the odds are really quite short in that regard.
Yeah, do you know, I got a call from a broker yesterday trying to offer me their services, and I get so fed up with these people that I took the call. I've been ignoring them all day. They just kept ringing and ringing and ringing. So I took the call, and the guy said, wouldn't you when you get your advice from your broker, wouldn't you like that advice to be something you can trust? And I said, well, I don't trust any broker. I wouldn't take any advice from a broker. And he said, well, yeah. He said, well, you can trust us. And I said, all right, well, give me an example. And he said something about Apple. And I said, I don't really care about Apple. I said, give me a world event which is going to affect my trading. And he went, oh, a world event. I said, all right, for example, what's going to happen tomorrow with the Fed? And he went, oh, I don't know. Nobody knows. And I said, well, everybody does know, because everybody said it's going to be a rate hike. And he went, no, I don't know that. And I said, well, if you don't know that and everybody else seems to know it, what sort of a broker are you? And he said, no, I'm your account manager. And then he said, I'll get someone else to talk to you about interest rate rise. And I said, well, you're meant to be my account manager, and you don't know that there's meant to be an interest rate rise tomorrow. So, I mean, obviously, he's kind of one of these people that he's a salesman. Yeah, he's in a job, and I felt really bad afterwards, because I just thought, why did I kind of feel the need to kind of push him on something that he obviously didn't know anything about? But I think that, it just got in that part of the day that I was just fed up. I was playing with my daughter, actually, and I was just fed up with them constantly ringing. So I thought maybe that,
because he's doing that to you.
That's true.
6 of one, half a dozen the other, as far as I see.
Yeah, that's true. That's true. But I wouldn't like his bosses to hear back the conversation and then just go, "You idiot."
Well, maybe they should educate him before they set him loose on the phones.
Well, they should. I mean, this is the thing. Yeah, he's obviously been trained really badly. But as you say, he's a salesman, and I feel bad. The reason I feel bad is that he's just doing his job. He's probably had very bad training, as you say, but his job is to try and get people to sign up to his brokering firm. And to be fair, if I didn't have one, then that would be a product that I would need. So, so it's not like he's not offering something that I use. I just you know, because I've got the broker companies that I use, that I'm done. You know, I've got the ones that I like. I've got Actions to Wealth broker company, and there's also I've got my own personal one, and I like those ones. So
That's all it counts.
yeah. This is the thing, you know. The other one I really like because it actually gives you an array. It gives you kind of things like Bitcoin and Ripple and Ethereum and pound versus just about every other currency pair you can think. It gives you euro versus Bitcoin and loads. It's really good for variety. The thing with it is, in actual fact, and it's a shame that we don't have Ripple on either FXCM or these accounts, because I got a little tip yesterday that that the fundamentals of that are actually going to start looking fairly good, and I would have liked to look at the chart. Yeah, I mean, I don't know, I know very little about cryptocurrencies, and it's not down to ignorance; it's down to choice. I've kind of got no interest in them because and purely because I love trading the FTSE, and I've got an affinity with the FTSE, and I trade the FTSE for the reason that I've got it's my personal friend. And then after that, I start to go towards the euro because you're starting to educate me in some of the ways that moves, and a little bit the Aussie, obviously the pound. So it's the FTSE and the pound for me. So the way I see it, I've got other things to really familiarize myself with before I get around to cryptocurrencies. I think
I absolutely agree, and you know, it's such a pie in the sky. I hesitate to call it that because I think in many ways cryptocurrency in and of itself as a concept is very sound.
yeah.
What I don't see is how the established fiscal or monetary setup, the word I'm looking for is authority, not authority, system, how that's ever going to allow a system to take over without a massive fight.
Yeah.
And this is the thing that I don't see clearly. I
Yeah.
don't see how you can just go from a currency system that has worked not so much for the people who use it, but for the people who manipulate it. I think they're not going to give it up very easily or very quickly. That's for sure.
No. I mean, I think it might be. Do you know what people are hoping for is that people power comes into play with cryptos, because it's obviously, you know, Ripple actually is a crypto which is run by the banks. So they are using cryptocurrencies, and I know Mark Carney's kind of discussed a potential positivity that he's going to maybe start to use cryptocurrencies. The Bank of England will start to use cryptocurrencies, so that they are out there. But I agree with you. I think that we're in such early throes of this particular movement that the ones that are, you know, Wild West style, like Bitcoin, for example, I think are much more likely to, unless they can adapt, I think they're much more likely to just die away. And I think Bitcoin, even though it's been around for the longest time, it's still relatively young in its in currency terms, and because of the way that it's designed and who it's really targeting. You know, as you say, you know, the institutes control money, and if they can't control an aspect of money, they just won't. They just won't put it into the public domain to be useful on the wider scheme. So I think things like Bitcoin will, you know, be further pushed underground. But there are,
you know, which is really interesting, because that's the whole idea of cryptocurrencies, is to get rid of these dudes. You know, get rid of the power and the control.
Yeah,
and that's, you know, it goes again to what I just said.
Yeah,
I don't believe these guys are just going to roll over and say, "Oh yeah, we've had a good time. Our days are done."
Do you know what though? It's you know, the interesting thing about that, and if I compare it to the music industry, that was what happened with the music industry. You know, the music industry, you know, sat on their laurels to a degree because they figured that they would always have physical product, and you know, the internet could not harm them. And the internet became the Wild West of the music industry, and look where we are now. You know, most of those record companies that we associate with power back in the I suppose I'm going to go up to the 90s, because that's when the internet really took hold. Most of them have gone. So it's a really difficult call, and you know, I'm certainly not qualified to make a prediction on it, but
No, neither am I.
but I suspect that, you know, that the banks are probably a little bit more savvy than that, and governments are a bit more savvy than the music industry. But we'll see. You know, they might be too arrogant, and that's going to be their biggest problem if they're too arrogant about it.
I have no doubt there's change coming,
Yeah.
but what it looks like is what I'm contesting, if you like. I don't think it looks like what we're seeing at the moment. It's probably got a lot to do with blockchain. I find that technology very, very interesting. But as you say, you know, the music industry's changed completely. Look at transport industry, in particular with cabs. Look at the accommodation industry, in particular with hotels, which, you know, Airbnb's just changed the way we do things. You know,
well, that's very true.
sharing,
Do you know what though? The difference with those and the way I sort of like see with transport and Airbnb is that there's a physical product at the end of it, but with music there was no there doesn't have to be a physical product, and with money there doesn't have to be a physical product. And I suppose when you can digitize something, you can steal it. You can't do that with food. You can't do that with property. You can't do that with transport. So I think that the beast is even more confusing when it comes down to things that you can digitize and steal. You know, clothes are another one. You can't do that with clothes either. So anything that doesn't necessarily have a physical entity, because what's money? You know, money is just your imagination, really, isn't it? You know, they say, oh, this piece of paper is worth this, and everybody goes, oh, okay. So you know, it's different to. I mean, if you imagined you were wearing a three-piece suit, I think we'd soon know, and we'd let you know, Jeff, you're not wearing a three-piece suit.
Perish the thought. I gave those up years and years ago, anyway. But yeah, indeed.
Anyways, I guess we get back to some trading, because I've got nothing really going on here. You know, anybody that can see my chart, this is just noise. You know, we've got to avoid noise. 74.93 is noise. It's not tradable. It's not an area we can trade. My concern is that we finish the show. You know, when we're not that far away, only 45 minutes. We may finish the show without taking a trade. So make sure you note down 74.77 if you want to trade the FTSE. That's a potential long there. The next long is at 74.50. Next long at 74.20. You know, there are long areas. Yes, you can try the short at 75.16, but I would not advise going short on this market. So let me hand back to you, mate, because we haven't covered we haven't properly covered the euro.
All right. On my double cross, that would be out by now, wouldn't it?
Oh, sorry. Let's quickly talk about your double cross, because this is how you get schooled by somebody that doesn't trade the FTSE. I was looking at.
Oh, it's still in. Okay.
Yeah, I was looking at this. This is your double cross.
Yeah.
So
the red candle's the trade candle. Yeah.
The red candle's the trade candle. So this very clever man told me yesterday that there was a trade above this level, which is really interesting, and I'll go into this actually in a little bit of detail, unless you need the screen specifically.
No, I don't. No.
Okay, well, look at this. This is the sad thing about this is that it gave me a setup in your particular price as well. So we both had the same chance at the same price, but for different reasons. So
yep,
this was Jeff's trade. We had a trend line here and we also had a pivot, and the pivot was at 62. Which is the key aspect of this, isn't it? 74.62. So the pivot was here. That was the pivot. So that was the pivot. So price came down, closed under the pivot, and closed under the trend line. And yesterday, Jeff was saying to buy the high of this candle. And I suppose you would have put the stops at the lows, right?
Yes, that's right.
So that would have gone 40 pips. So it's about 2 to 1.
I wouldn't have let it run that far, to be fair. But
okay. But it was
certainly not the first half. I would have
it's
been
a
out at the
40 pip
high.
range, and it gets up there. Now I trade off the short term time frame, so I like the 5 minute chart or the 15 minute chart. And when I flip to the 5, this was my entry here.
Yep.
So same place. That's your one, and that's mine. And mine would have been the same place because I would have obviously needed a couple of pips above the candle. So we should have both got into that yesterday. And what was going on here? What was going on? That was at. Oh, you know why? Oh no, that was at 11 o'clock. No. You know what it was? That was just before we started the next show.
Yeah.
So I was distracted, which is,
hence no entry. Yes.
Hence no entry. Yeah. So I wasn't alive to that.
All right. I'll continue to monitor my little scenarios on your charts and see if we can come up with something there that might work more than once.
Oh, do you know what? I think I think over time, with us looking at each other's charts and specifically with you looking at the FTSE, I think over time there are going to be opportunities that I would not necessarily have considered that I will now consider. And you know, the annoying thing for me is that if I'd seen that, then I would have remembered your double cross, and that would have given me a double reason to get in, because I love this. I think this is brilliant, and I love the name as well. I think the name is great.
I do come up with some funny ones.
Well, I like it. I like it because it does say, it says what it means, doesn't it? The double cross.
It's
just
exactly
when you think it's going to the downside, then boom. I mean, when you first said it, I thought you meant that the entry was the open of the next candle, which would be a very interesting and brave idea, and I quite like that. You see, the two areas that have to be considered, and this is something that that I want to talk to you about. Maybe we'll talk about it after, actually, because we'll have a little bit of time. Let's talk about the euro first.
Okay, but the real difference between entering at the bottom of that bar and the top of that bar is cause and effect. I'm trading cause and effect versus predictions. I'm not predicting that price is going up here. What I'm saying is, if it does, I want to be on board.
Yeah.
That's the difference. I'm not trying to predict that the market's going up there. Anyway, as you say, we'll come back to it.
Yeah.
We were talking about. Did we start on the euro?
No, we started on the Aussie. We haven't done the euro yet.
Okay, then let's do that. And we want that screen, and bingo, should be there. We didn't speak about cable, but we'll go to the euro first.
Yeah, I think it's important because what we're looking at with all these is what's the dollar looking. Really, that's what we're saying, isn't it? How's the dollar going to trade today?
Yes, well, to me, and as I say, it's a fait accompli that every FOMC day, pretty much, if I traded on NFP day, I would do exactly the same thing. If there's an interest rate announcement on the euro, I pretty much do the same thing. On the pound, I pretty much do the same thing. Or if there's a major announcement coming, I pretty much do the same thing. And I just rule off where I don't want to trade outside. And I don't want to trade outside this line, and I don't want to trade outside this line. And like I said before, I'm happy to trade from resistance to support, happy to trade from support to resistance. The one area I'm not fussed on trading from is exactly where we are, and that's dead set in the middle, because clearly we're in a range here. And who am I or anybody to predict which way this is going? Impossible. Absolutely impossible off this chart. It's a flip of a coin, and it could go either way. The one thing I would say, and this is what I hinted at yesterday, if price is still in this area, which I suspect it will be, around about FOMC time or Fed statement time, then there's a trade available to us. We can trade long above here, or we can trade short below here.
Oh, okay.
So what I effectively will do is I'll place a long order here with a stop here, and I'll do exactly the reverse. I'll put a short order
Right.
here with a stop here.
I like it.
Yeah.
I like it. Do you know what I really like about that is that if you, because a lot of people will be going, yeah, but it could come and whipsaw you, which it absolutely could.
Sure.
But all you need to add into that is with the correct money management, you could be risking 0.5%. You know, you put in 0.25% to the upside, quarter to the downside, 0.5% trade. If one of them kicks, then it's probably likely to go 2, 3, 4 to 1, so you get a whole percentage out of it. And then you know for a 0.5% risk, I think it's a great trade with the right money management.
Yeah, look in, and I guess this is a case in point. This used to work unbelievably well when the market, if you like, reacted as you would expect the market to react on an interest rate rise. These days, things have changed dramatically, and there's many things in my head as to why that might be the case. On top of the list is a thing called computer. And I think the computers, they're continually getting in and out of the market, taking profit in very, very small doses just because they can, I suppose. And I find that unless there's a massive disparity between what is thought and what is in any news event, then we're tending to see we'll go straight to resistance and pull off it, or we'll go straight to support and pull off it. So if I get my entry right here, and it's generally 10 or 15 pips below where I consider the range to be, I don't get taken in on a whipsaw effect. And this is part of the key to the strategy. If price is here when the announcement's made, I'm not interested. If price is here when the announcement's made, I'm not interested.
Right.
That's why this line is on my chart. That's where I want price to be.
Interesting.
So if I'm in this area, I can withstand a lot of whipsaw effect here.
Yeah.
And not get entered.
Yeah.
So that's the theory behind why I actually like this.
Yeah. Yeah. Very good.
And
I like that.
If it is a game changer, then the chances are we'll get a very big move out of it. And
I mean,
relatively small risk of something quite good.
There's another way to play it, I suppose, as well, which is hedging it against another currency. Is that a consideration, or is that maybe getting into realms of?
Look, I think that's something that you could consider. Certainly, I'm not a massive fan of getting into complex situations, to be fair. So this one here is the one I found that works for me, and I'm kind of happy with it, and just leave it alone at that.
Yeah, that's really good. Very cool.
It depends, of course, on where the range is, and what normally I use is Monday, Tuesday, Wednesday of this week. So we're talking pretty much where we're at. There's a little spike above there.
Oh, okay.
But we're very, very close to it. So Monday, Tuesday, Wednesday. Tuesday's definitely pretty much the range that I'm talking about. Yeah. Monday's a little bit outside of it, but I'm probably happy with that. And so far, we're looking good with Wednesday. But that's,
do you know the other thing that I really like about this is that it's news that makes moves, and I think if we look at this sort of thing, then we effectively are looking for a move after a news event, and it's just making sure that we get on board of that news event, because obviously people are already in this trade, and that so far those people would have bought the euro, and there'd be obviously nobody can be in the trade that's selling just yet, but those that have bought the euro are looking for some sort of announcement to keep their trade going, to keep their direction going to the upside. But it's these news events which cause these explosive moves, and sometimes that's what that gets the trend starting as well.
I'm going to say the really cool part about this is it can start a trend.
Yeah,
so you can get a whole lot of value out of this one trade.
Yeah, I really like it.
Yeah, it's not necessarily the case, but there are times where you can get some really, really good mileage out of this one.
Yeah,
Let's
and
hope. Let's hope it sets up.
I think if you go back in time, you would certainly see evidence of news announcements actually. Yeah, that can create some decent moves in the market and create the starts of something significant.
Yeah, for instance, if the Fed don't raise interest rates today, I think there's going to be a big move.
Oh gosh, yeah,
Mm.
yeah, but because it's so
And
telegraphed.
yes, and potentially the dollar will tank on that. We'll
Yeah,
see.
and it has to be said that that there's every chance that they don't raise interest rates because of this trade war. You know, if that that well, not every chance, but there is a chance that they look at it and just go, it's going to be a little bit of a dangerous period right now. When I look at the pound and I think about just the kind of cyclicity that we are seeing with the pound, if we forget all that's gone before. Well, we don't have to forget all that's gone before. If we consider the longer term timeframes, the longer term timeframes are still suggesting that we've got some upside. We managed to hold this area, and now when we look at the shorter term timeframes, the 4 hours a little bit dangerous because of the pattern and that trend line that you also have got in play along here. So that does make things a little bit tricky. But if we think about the most recent run here, there's a high, there's a higher low, and there's a higher high. So we do actually have a trend on this 4 hour. So and also on the hourly. So if we were going to trade this, really, I'd quite like to in a normal environment without something to shift it around. I'd quite like to see if we can pick it up, somewhere on the 50% fib, somewhere on the trend line. I wouldn't want to see this dip too far down because it starts to break the pattern a little bit. But somewhere around about that 130, 145, 130, 140, something like that. I think there are potentially still buyers going to be interested in that area, and I think if that's before FOMC, there's no reason that this can't continue to ease to the upside. So who knows if that was to happen and then start to explode? That the way this is currently shaping, there's a little bit of confusion, but you could certainly make a case for this trend to continue. Which means that there
The
are
wave rider guys are onto this as well.
the pound.
Long, that is.
Oh,
Yeah.
there they are on the pound dollar.
Yep. Yeah.
Oh, let's have a look.
Of course, I'm in the opposite direction.
Yeah. Well, I could see.
And I mean, the reason, apart from that trend line that we're speaking of, this one here, I can't get that bar out of my head. That's a big bearish engulfing bar right there.
Yeah. Very true. Yeah.
And well, again, it's cause and effect for me. My order's underneath this candle here.
I mean, with that,
if I'm wrong, then it really doesn't matter because
no.
the chance of being taken into the position are very remote.
Yeah, absolutely. But with that, would that not count
right,
as a potential double cross?
The reward's pretty good here. Which one, mate?
With the engulfing bar.
This one?
Yeah.
No, massive bar. Way too big.
I mean, it's on a daily chart, though, isn't it? So would that not?
It is, but there's resistance here. There's resistance here.
Yeah,
There's resistance here.
Yeah.
Yeah, no, not for me. Not that one.
Okay. So too big a bar. Okay, so the question that I was going to pose to you was, okay. So firstly, do you look at bars to give you hints of direction? That's the first thing.
Look, I never used to. Sorry, let's go back to my early days in my career. That's all I traded.
Yeah.
I only traded candles.
Yeah.
And what they were telling me at the time. So if I saw this tweezer top sitting here, if I saw that sitting up there at a resistance level, I'd just jump straight into the market underneath it, for sure.
Right.
And to this day, I think it's still a good scalping strategy
Yeah.
to do that.
Yeah. Yeah.
Because, it's a very clear double rejection of a level. Of course,
Yeah.
price is going to fall away from it. May not fall away too far, but it's going to fall away from it. That's a pretty clear signal there. And as we saw, it didn't mean too much, but I was actually putting a lot of weight on that because I think there was the weekly pivot was being there and probably still is, of course. It's still this week.
Yeah.
So, that looked like a great level to get into the market short. Because I don't trade in a scalping fashion anymore, my entry was under here. So, again, cause and effect. If I don't come down here, then I'm not in. And, being wrong doesn't cost anything.
Yeah.
So that's the principle behind it. But I still see on the daily chart that nothing really has changed. We haven't taken the high out. Well, actually, one thing has changed on the 4-hour chart. We have taken that tweezer top out, and that's a bit of a concern. So we've got a higher high here, and that is a bit of a concern. But again, if price goes up, it doesn't really matter to me. I'm not a bull. I'm a bear down here.
Yeah.
And that's the difference. I'm not necessarily a bear here, but I'm certainly a bear here. And I'd be a bear here as well.
Yeah.
If price gets there. Because again, it's simple logic to me that we've hit a strong resistance confluence, if you like, not for the first time. We've hit it here, refused, hit it here, refused, hit it here. Do I expect it to smash through there on this occasion? Look, it may well, and if it does, I hope it gives me the indication that it will. But if I see something of a reversal bar here, then yes, in that regard, I'll certainly take notice of it. Not because it's a reversal bar per se, but of where it is.
Yeah.
It's coming off a double top. It's forming ugly, but a bit of a right shoulder, and it's at or at the left shoulder, if you like. So I think that's a reasonable conclusion to come to, that we're going to get a pullback here.
Yeah.
So yeah, why not?
Yeah. Yeah. So you'd look. You would never look. I mean, I suppose the question is, you would never look at a bar that gives you a hint to give you an entry level at its low. Does that make sense? Or high. So, for example, so we're looking at the 4-hour chart here.
Yep.
You got 3 black crows.
Yep. 1, 2, 3.
1, 2, 3 black crows. Now we get a spike from the end of that 3 black crows, but it's not a great hint that there is support down there. But we can see that there's support down there, and then we get a little tail. But then we get this little just if you go right to the high of the spike, sorry, the very low of the spike. So the last crow there. Yeah, so we know that there's a potentially price there because of what happened on the 14th or 15th. There's that little spinning top, and then we get a belt hold, and then we start to go. So then we get the 3 black crows coming in. Then we get a spinning top. Then we get a belt hold. Then we get a spinning top. Then we get a we can't really call it a piercing pattern, but it's fairly close. But it's like a tower bottom ish. But the very last candle, so that white candle, the tower bottom candle, comes back to near the low, not on it, but near the low. Now, most people are going to be trading with a break of the belt hold, the break of the spinning top, and the break of what looks like well, let's call it an umbrella because it's not really a hanging man. So there's a level there that most people where that stop loss is. Most people are going to be setting orders above that level, right, to try and get in. So my question is, after seeing the third black crow with a bit of a tail, after seeing the spinning top, after seeing the belt hold, after seeing the umbrella line, is there not enough evidence there to suggest that we've probably got an area we can trade from, and rather than taking a trade at the high, we trade at the low?
Long, you mean?
Yes.
I'd probably dig a bit deeper.
Yeah.
So I'd probably go down to a 30-minute chart if that were the case.
Yeah.
And there I would look for what's happening on a what I call a trade line plane.
Oh yeah.
And I'll find little interesting things like, okay, test here and a pullback, test here and a pullback. And that gives me the opportunity then, on the back of what you've just said, yes, there's definitely room for consideration that this is at least a hold, if not a retrace, if not a reversal. Then that's what I'll be looking for. And I'll be looking for something like a double bottom on a smaller time frame, followed by a higher low, or even a higher low here. And if I saw that, and then I saw an approach and pullback of that level, and that level is this level here. I saw something like that. That then gets me interested.
Yeah.
Because price, again, cause and effect. If price is going to dive as a result of that bar, then I'm not concerned.
Yeah.
But if that fails as a bear area, then the logical conclusion to that is it's going to not fail as a bull area. And that's why I would then put my entry above the rejection bar, if you like.
Yeah.
So that I've got that little bit of insurance built in.
Yes.
And that's why I would trade probably there rather than, down here or wherever we're talking.
Yeah.
So
it's just this stuff really interests me because I've never done the maths on it, but I'd love to do it, and I may well do it next month. But I've never done the maths on the fact that rather than buying of a break of a bar, you buy if there's evidence that there's a hold, you just buy it. You're not going to wait for any breaks. You're just going to buy it, and you're going to buy it as low as possible to the to the lowest area possible. So the tricky thing is, where do you put stops? Because if you're buying at the low end of the range, then where are you going to put your stops? Because if you put your stop below what would have ended up being the very last black crow, which is the lowest point, then there's every chance you might get taken out with more spikes. So I don't know whether it ends up being that lucrative or not. That's the real key. But I'd love to try it and see, do a proper experiment on that stuff.
I think yes, it's interesting, and I'd like to see the results of that survey. That's for sure. And I certainly wouldn't dismiss it, because evidence-based theory is really good for me. I enjoy that.
Yeah.
But I think, again, the way, and because I guess I'm ancient and more conservative than most, and certainly than younger people, is the reason that I like to trade what I call cause and effect rather than speculation. It's all speculation at the end of the day, but I think I've got reason to believe that I've got a little bit of an insurance policy built into the system, because it only trades in the opposite direction to current momentum, if you like, which is a crazy way to think in most people's mind, because surely that's a seller bar, you're going to sell it.
Yeah.
Well, no, not for me. If it's a seller bar, I want to buy it.
Yeah.
Because of that little insurance policy that I've got, that if I'm wrong, and wrong's not the right word either, because really, again, you're going back to the cause and effect situation, and I only want to be long if price comes here.
Yeah.
I don't want to be long if price doesn't come here. It's it's pretty simple. The theory behind it. Of course, you can get caught up with with all sorts of different scenarios. You know, this bar here can take you in, and for whatever reason, the market can just go away and fall against you. That's trading. There's no way that you're going to stop that happening.
Yeah.
But look, I'm just happy with that little insurance policy, as I call it, and I've been comfortable with it for many, many years. So to teach an old dog a new trick is not impossible, but
Yeah.
It's kind of, I'm open to it, but only with a broad interest rather than I really want to dig deeper into it.
Yeah, yeah. I mean, I will try it on a very the difficult thing is that there will be a lot of losses. The good thing is that when you get a winner, that it's going to be in such a good price that there's almost going to be no way of getting taken out, because as soon as it flies, you can move stops to break even, because it's very unlikely to come back to test that particular area. It's going to come back to test the area that it needs to break, more likely. But there's going to be a lot of losses in there, because I think trying to ascertain the right level, the right place to put a stop, the where you're going to get in and out. I think that's going to be the tricky thing. What I should say is there's going to be a lot of losses in the first instance, but I think eventually it could be kind of cool. Interesting, euro dollar. So are you finding a potential trade there?
Yeah, I'm having a look at it. Looking to just take this little bit of profit here that might be available before we hit the top of that self-imposed range, if you like, that I've put on the chart. I'll see how this candle closes in 15 minutes just as we go, and if it closes as a bearish decisive bar and on pretty much its low, then I'll do exactly what I've just said I'll do. I'll trade it long above it.
Well, and the trend line up there doesn't trouble you?
I actually like it there. I don't like that we're a little ways off it, but what I will do is I'll closely monitor it, and yeah, I may look to just pinch a bit of profit and get safe in the trade at that level. But generally, if I'm right here and the cause and effect comes in, it should rocket through here. It shouldn't stop at that. If I'm wrong and it does pause here, it should give me plenty of indication that that's the case, and I should be able to get out of it safely.
Yeah.
So I'm fully aware of it, which is why I put it on there to see how close it was.
Well, do you know what? Let's have a look at this. This may well be an interesting scenario here. Look at this FTSE.
Yep.
So possibility trade it back to the highs here. Would that be something that you would look at with that?
No.
No. Because of where it is.
Well, I don't have a setup there at all.
Oh, so just the seller's bar doesn't interest you in the upside?
No.
Okay.
In particular, with the gap that they're still open below us,
Yeah, there is a gap, and I suspect this is what we've got really going on with the FTSE is people attempting to break these highs. In fact, this is a really good example of what I'm just discussing. We know at this stage that we've got this resistance up here. We don't know how significant it is, but we've got this bar here on the hourly, so we know we got some resistance here. My question really would be, if we come back up and refuse on one bar. So let's say we end up with, I wish I could, in fact I can draw it. Let's say we end up with something that looks like this. Let's say we get something that looks like that.
Mm-hmm.
on the half-hour chart up here. When price comes back up again, I think there's some validity in just trading it, because you've got evidence from yesterday that there's a refusal. Then you get evidence today that there's refusal. I wouldn't want to just trade it as soon as it comes up there. But let's say that you get evidence today it's going to refuse there. Most people at that point are going to be thinking, right, there's resistance up here. Maybe because this is an uptrend, you know, it's not so valid. You know, maybe we want something down here while it is uptrending. We want something down here, but let's say that there would be people that be putting entries under the bar there.
Mm-hmm.
I think that there's some validity in entering at the high, and then seeing
short.
Yep.
Yeah, I like your theory. It's a little high risk for me, I've got to say.
Well, I think it would need some filters, and I like the thought of then shipping into a short-term time frame to see if you find some sort of little pattern up here. But
like I did before, yes.
Right, exactly.
That's where I'd be going. Yeah.
I think that would be enough of a filter. You know, when you kind of when you go into it, you're looking at price action alone. You know, because we know that this price is good. Our job as price action traders, number one, is to find the level that we need to trade from, and then number two, to get the signal. So we you know, at this stage, I've got nothing to do. You know, it can do what it likes up in these areas, because really I'm trading here or I'm trading here. But just like this bar, you know, came down and it was a potential area to trade, which is where we got our double cross down here.
Mm-hmm.
Really, the entry wasn't until the high of the double cross. You know, for both of us, even for me, I didn't really have a setup here. But that's giving away 20 pips.
Mm.
You know?
I actually don't sweat too much over that.
No.
Because it's not that part of the trade that I want. It's the middle part, you know.
Yeah.
I find is the let's call it more reliable. I know one of our
key, isn't it?
calls it the easy money. I don't think there's such a thing, frankly.
Yeah.
But I call it the more reliable part of the trade, and you know, for that reason, I'm far more confident in that area.
Yeah, and I think that's the key.
That's a big thing. The big thing is confidence. You know, you can actually ruin yourself if you haven't got any confidence.
Yeah.
And so that's, you know, I think if I was 20, I'd probably be different. In fact, I know I would be different because I used to gamble like a rat bag.
Yeah.
On the ponies.
Yeah.
And they were always the ones that weren't fed or that jumped the fence or all sorts of different things.
Yeah.
They were the slow ones, you know? So it wasn't a lucrative career by any stretch of the imagination. So I got very, very anti high risk stuff very early in my life.
Yeah.
And I don't think I've recovered from that. And I've always been very conservative since then, because, you know, I like to have nice things and I like to have a comfortable bed to lie in, and I like to have a car to drive around in. And that was the tipping point for me. I bought a brand new Toyota Celica circa 1982 or something like that. And in 3 months' time, I had to sell it to pay the bookmaker.
Right.
Because I used to bet without money, see.
Wow. Yeah. So,
and rather than finish up in the bottom of Newcastle Harbour, I felt, well, okay, I think it's time that I had a little bit of a look at what I was doing.
Yeah.
So that probably explains why I'm not a high risk trader.
Well, but I suppose this is the point I guess I'm making, is that I agree with you. We don't need to worry about the 20 pips. But the point I guess I'm making is that by the time it gets over this line and there is an obvious setup, everybody's seeing it. Down here, it's shadowed.
Yep.
You know, this trade is so questionable. Do you want to get in here? Do you not want to get in here? It's so questionable that that it's almost cloaked. So, forgetting that the 20 pip mark, if it starts to move to the upside, I suppose my point about the 20 pips is that doesn't that then become protection? because there's a long way from this point to this point to then just shift your stop to break even if it starts to go in your direction. If it doesn't, you get out straight away. So what you end up with is, you know, and this is the thing. I'm almost sort of telling myself how to trade it, but you almost end up with something which is a 2-to-1 trade even before everybody else has got in.
Yeah, no, I know what you're saying, and I do like the idea, and I think it certainly bears a lot of consideration. I think the easy way to investigate this, or back test it if you like, is to look at exactly what happens when you do get an oversized bar in whichever direction, and how many times that actually converts to a follow through bar. And that's going to give you your probability pretty much straight away.
Yep.
But I don't know that you would be looking to trade it. You certainly wouldn't be looking to trade it as an engulfing bar without taking profit out of it. You know, if a 50% retracement on any big bar is going to give you a decent profit anyway.
Yeah.
So yeah, I'd be happy looking at that. I don't think that's so scary.
Yeah. I need to do some work on this, but I've just been thinking about it, and actually, this is something that I did when the market was here. I traded that.
Yep, nice.
And it was. Do you know what? I was really pleased and very proud of myself for trading it. But as you know, I also traded up here and here. So this is remember that day that I was just buying up. I just wanted to get in. I was buying up. So I held this, and it was really hairy because it came all the way down here, and I was still in these trades. Right, I didn't use any stops. I just, you know, just trading to the upside, and I got back in here, and I thought, you know what, let's just hedge it. If this goes up, I can close out some of these and get to equal value. Yep. And then I'll re-enter it another opportunity, which I did. So yeah, I did manage to trade this, and actually that was that philosophy. And this is, I'm attempting to do it, but it's
a ballsy move when you've got 2 positions going against you, isn't it?
Oh, mate, you know, it was yeah, because you know the potential for me to not only lose this amount, but then, you know, continue to lose money as this one, you know, went through the trend line down here was high. But I liked how fast it came down there, and I can't remember why. That's the thing about it. There was a reason that it came down there. I think it was CPI, and you know, we'll talk about specific news events at a different time, but there's certain news events that happen from the UK that cause certain moves that are really tradable, and that was one of them.
Yeah.
But at the time, I'd forgotten there was CPI. So when we were talking in the morning, I was entering trades, and then we looked at the news, and it was a bit late by that time. But CPI is a really good day to trade. For the pound. I don't know about the dollar, and I think we will have to test it out, whether we know what it's like for the other currencies. But if it's good for the other currencies, then we've got 6 days of trading right there, which could actually work out very well.
Interesting. Oh, sorry, I'm looking at charts at the moment whilst you're talking there.
Yeah, but it's one of those news announcements which tends to cause speculation and then a reaction, and oftentimes it's in the opposite direction. You know, they get it wrong quite a lot, CPI.
That's interesting statistic in itself, isn't it?
Yeah, it absolutely is. You know, I don't know what the actual average is, but ever since I've been watching CPI, I see at least a 50% mistake. And it does create a trading opportunity.
Oh, okay, interesting. You know, isn't it fascinating, the things that once you start to talk, and we're officially in a holding pattern for sure.
Yeah.
Because of the FOMC statement, probably.
Yeah.
But, it's amazing the sort of things that you get around to talking about that you know is sitting up there in your head, but without vocalizing it, to sometimes reassure yourself that that's exactly what you want to do.
Yeah.
It's a funny phenomenon.
Yeah. Well,
And
it
I do it all
absolutely.
the
Yeah.
time. When I'm talking to people, in particular in a coaching situation, I actually vocalize stuff that is deep embedded into my psyche as far as a trader is concerned, and I think, shit, that's bloody good. That's good
Yeah.
information, you know.
Yeah. Yeah,
And
but
I find that
it's how you
fascinating.
write it down, isn't it? It's how you write it down and then actually formulate it. Because you're absolutely right. You come up with, you know, I'm the same as you. I come up with some of my best stuff just while I'm chatting off the cuff. And I, you know, it's actually it's made me think of something just that I'm gonna start doing that I realise I have done in the past, but I haven't really put it into words to make it a strategy. But after we get off the or after we get off air, I'm gonna formulate something that's just made me think. So but yeah, you know, it's the same, mate. Absolutely the same. It's amazing sometimes that just kind of just chewing the fat is where you get your best ideas. Now, have I lost you? I think I've lost you. Yeah, you may well have frozen up, which is fine because it's Jeff has crashed. All right, double check. Yeah, I think Jeff has crashed. It's hard for me to know because I can't ask you guys to tell me. But I think Jeff has crashed. We're at the end of the show anyway. Not a great trading environment. Very slow, very sluggish. You can see that there's a move out there, but not a particularly attractive one. In actual fact, when I consider where we are, we're about 12 pips up after the first hour, and we get this lonely little hanging man here. So I am going to close up, and I guess we will be in. Oh, you're still there, buddy?
Am I back? Yeah.
Oh, cool.
Look, I'm going to quickly take this trade.
Oh, cool.
Whilst we're here.
Of course, top of the hour, yeah.
Let's see if I can actually get it in the market before it takes off, if it's going to take off. I'm not going to. Oh, I should share the screen, yeah. If you can see me, happy days.
Yeah, we
it's
can
going
see
to be
it.
a buy. This is going to be a buy stop. And the entry level is going to be at 1.1773. So 1.1773. Come on, you can do it. Stop is going to be at 1.1761. So it's only 8 pips of risk here. 1.1761. I don't know why I don't just type that in. There we go. Now, we won't put any profit level in here, but what we will do, what am I trading this at? Oh, half a lot. That'll do. That'll do. It is a high risk day to trade. So we'll just trade that at half a lot. And we're looking for an entry here, of course, this being the risk area. So when we hit that level, if it doesn't smash through it and pause, and here's how I'll look to take profit here. As soon as this pauses after hitting that line, if it does hit the line, I mean, as soon as it pauses, and you see every time that the market moves, it will pause. It'll just stop for maybe a half a second even, or a second. That's where I want to take profit. It might stop here, it might stop here, it might stop here. But as long as it's clear of this high and at that line, as soon as it pauses, take profit. So take half off the table, and whatever you take off the table there in terms of pips, say it's 4 pips, then move your stops 4 pips from entry. Okay, and take half off the table. The rest you can leave open to this line here, which is 1.1793. I'll actually pinch a couple of pips off that and close it there at 1.1786. Okay, so you've got about a 1-to-1 scenario there, I think, but with your half off, you're less than that, of course. Yeah, you've got a bit more than 1-to-1. So that's the trade, guys. Entry is above here at 1.1773, and the stop loss is at 1.1761. But nice. manage it here, because this is your danger area right here. Okay. There
nice,
you go,
mate.
mates.
Nice, like it.
Let's see how that pans out.
Yeah, I like it. Really cool. Okay, well let's shut up shop, and we will be coming back in. Are we in later?
Not today. No.
No, not Lloyd and Shirlene today, is it?
No, I'll chat to you on Skype in a minute.
Okay. Okay. All right. Thanks for listening, guys. We will get to the point where we can see your questions and comments, but we're not there yet. So apologies if you've typed something in the box that we haven't read out. But we're just not there yet. It's still early in our new formats. In a trial, yeah. It's still a bit of a trial period. Exactly that. All right, buddy. Well, I'll speak to you very shortly, and everyone else, see you tomorrow.
Happy days, everyone. Have a good one.